Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Don't forget to like and subscribe and click the bell so you get a notification of when we're releasing a new video. I'm back in the hot seat with Michael Porter. Michael, welcome back.
Yeah, thanks, Robin. Morning. It's been a while since I've been in
It
the hot
has
seat.
been. Michael, you're going to have to tell the viewers what's happened here. What does the other guy look like? Is he still standing?
No. Yeah, I just had a little bit of elbow surgery for a sports injury. So that was 10 days ago or 2 weeks ago. Healing nicely. I'll be back on my feet hopefully next week or the week after that. So
Good. Awesome.
all going well, but yeah, just been a bit out of action.
Yeah, awesome, Michael. And we've been traveling well while the younger team took it up.
Exactly.
So, Michael, we kind of seen sort of not a lot of excitement around the world. We still don't have resolution in the Middle East. And I was saying to you this morning that the BBC doesn't even have anything on Iran on the front page of their reporting. But the Rand is actually held up pretty well. And I'm guessing that that's got to do to some extent with the fact that our finances look pretty good and imports versus exports is in a good position, which probably brings us back to mining. So help us here.
Yeah, Robin. I mean, I think that, there's so much going on, and then sometimes there's nothing going on, And I think if we look at the war, it's not really becoming old news, but I think, people have got very tired of hearing Trump say, "Oh well, X, Y, Z is going to happen," and then it doesn't, or he changes tack, or whatever the case is. I mean, it's becoming almost farcical, I think, to some extent. If you're a serious world leader or something like that, But I think from the market's point of view, I think that they're getting a bit more comfortable. I mean, oil prices are jostling around a little bit, but we're not back at $100 or $110 a barrel. We were at $83 this morning. It would be nice to dip back into the 70s. I think that would then take the pressure off the petrol price again. But I think the market is expecting some sort of deal on Hormuz between Oman and Iran. And I think what the implication for that, and the US has got nothing to do with that, is that despite Trump's chest beating or whatever you want to call it. And I think the implication for that, Robin, is what we've been seeing for the last 5 years. Shipping costs are going up, so the shipping costs will go up. The cost of everything will go up a little bit. You'll pay a premium shipping in and out. So generally, over time, countries will look for alternatives, and you'll build new pipelines and things to reduce the reliance on that particular choke point. But I think the market's getting more comfortable that oil will flow, but it might cost a little bit more, And I think generally we'll just have to expect that some of these geopolitical things, as they resolve themselves, are going to lead to generally higher prices because, there are taxes and other things that are coming in that weren't there before, So that's how I really sort of see that, and I think the market's looking at that from an oil point of view. There was quite a lot of hoo-ha when our Reserve Bank didn't raise interest rates. And, or the Rand is so vulnerable. And yes, if the Federal Reserve had raised rates, I think when you discussed it with Billy last week, we probably would have seen some Rand weakness. So it was a little bit of a gamble on the Reserve Bank's part. But actually, for once, maybe they are taking some of the growth into account. They probably should have cut earlier in the year, but I don't actually think it was a bad decision. We know that growth is very weak in this country. But Robin, the Rand has been well behaved, and obviously the commodity prices are quite strong. Terms of trade remain strong. The gold price has bounced back. It was below 4,000. It's now sort of closer to 4,300, somewhere around there. Platinum prices have been quite strong. Obviously, with the oil price coming down again, those terms of trade just underpin it. And I think generally as well, sentiment towards emerging markets has probably stabilized. I wouldn't say it's turned, but I think it's stabilized, having had this war ruction. So, I think that South Africa's in it's a solid space. I think things are stable. And just on the mining side, Robin, commodity prices are strong. We've talked about copper endlessly, and mining companies are starting to report their results now. So we had Valterra last week. And just to emphasize maybe the impact from Valterra, they declared a 57 Rand per share dividend. that is about 15 or 16 billion rand in total. Now, 3 billion of rand of that goes to government. I mean, 20% withholding tax. So, I mean, Voltaire is just one company. I mean, all the mining companies are reporting, and not all of them obviously have all the operations here, or all the dividends gets paid here. But you know, some of the big mining companies are, all the platinum companies are producing good cash flows and dividends, and it's one of the things that's underpinning our revenues. Last week, government finances came out; they're running ahead of budget, and you know, so just generally, you know, if you think back a year or two, we were under continual pressure. Now, not saying that everything's perfect in this country, but some of that, at the margin, the pressure shifted to a slightly more positive thing. So maybe we've got a little bit more wiggle room, but I don't think that our backs are up against the wall as much as they were 2 years ago, which, you know, in market terms actually means quite a lot. It's not to say that things are perfect, but you're just not staring down the abyss.
Yes, you know, no, definitely. And Michael, I mean, there's obviously been sort of 1 or 2 announcements about sort of upgrading our outlook, and rumblings about potentially we might be upgraded in terms of our rating by some of the rating agencies. I mean, that's all good news, because that it's a positive momentum thing as opposed to a negative momentum thing.
Well,
isn't
exactly, Robin. I mean, I think, you know, in markets we often talk about the second derivative. It's not really in what direction you're going. It is the direction that you're going, but it's also the pace at which you're going at. So if you're just having continual downgrades, that's one direction. Now, even though the upgrades might be quite slow, the trend has changed. And I mean, if you follow some of the other things that are going on in the country, I mean, just around Transnet and obviously the rail reform, I mean, you know, obviously those concessions have been announced, private rail is coming. If you just follow things on Facebook, trains are arriving, you know, imported locomotives are arriving, imported wagons are arriving to be refurbished. So this whole thing is getting a momentum of you know, it's building up momentum. It's exactly what happened to electricity. You know, it was very slow to get going, but you know, next year we are going to see private sector trains on our railways. You know, and it is going to make a difference. And you know, one of the issues with Transnet wasn't just that they didn't have money to buy locomotives and wagons. I mean, it's one thing to say, well, the track is fine, but you've got to have something running on the track. Correct, you know, and locomotives are expensive things. You know. But you know, you've now got private sector capital buying these things. So I just think that from a company point of view, you can see the direction of travel. I mean, Afrimat is a company we talk about often. It's a great little company. It's been through some exceptionally tough times. And just engaging with the CEO last week at the AGM, the CEO basically said he's never experienced business conditions in South Africa as tough as this. Now, that says something. And you know, in those kind of network industries, so steel, mining, things are tough. You know, steel industry, we know what's happening with ArcelorMittal, and hopefully the IDC is coming to the party, but it's tough. But you know, on the flip side, you know, like the performance from Transnet is the best we've seen it in years. You know, volumes might be down because they're doing more maintenance, but when you do the maintenance, then the track becomes more reliable for the next year and things like that. So it doesn't, Rome isn't built in a day, but I just think that there's a sea change in what's happening on the ground that is going to manifest itself over the next year or two. It's not manifesting tomorrow, but it is going to manifest over the next year or two. So yeah, it's quietly positive, Robin, but you know, it would be nice to have oil back in the 70s, a little bit lower petrol prices, and just for that inflationary bubble to start deflating as well. I actually think the Reserve Bank did the right thing by not hiking rates. I know the market was very, very skeptical, and a lot of people thought, well, you know, that was a ridiculous thing. But actually, I think for once, maybe they just gave the economy a little bit of breathing room, you know, and the rand hasn't blown out, so they've been vindicated.
Yeah, you know? Absolutely. Oh, well, Michael, thanks for giving. I mean, we could talk about that all day. I'm so glad you're on the mend. Nice to have you back in the hot seat. Thank you for joining us. Don't forget to like and subscribe. We'll catch you next time. Thank you. Bye-bye.